First and foremost, what we need to understand, real estate in India at least has a certain set of patterns. There are a few thumb rules. When you would like to double something, double in terms of your investment, or when does it happen faster? When the price is at low. A typical 8 to 10 years horizon to basically look at a doubling scenario. North takes the east development, northwest takes better than north, west takes better than northwest, southwest takes a better stand than west, south is much better than.
Why South has been the sought after place than any city for that?
Just be environmental conscious, always the government would move towards the southwest. The west is more preferred.
Hey, hi Arun. Hi Balaji. This is Badri. So glad to kind of kick off the second episode of our discussion series. So today I wanted to take a shot at opening up. I know we discussed a lot of fascinating topics last time. We also discussed about some of the suburban projects, for example, like Navalur and all of that, kind of their history and how some of the big developers like Hiranandani come there, anchor and kind of develop the area. On that note, one of our viewers has kind of put a question. And Arun, we keep getting questions from a lot of interested investors and property aspirants, right, about various topics. So on this topic, even before this podcast, we used to get a lot of these. So now that we have started these, a viewer from the last time has asked a very relevant question. The viewer in question is an NRI who's kind of returned back to India for good with a decent chunk of money, right? He's a FANG company employee who had 5 years of very meteoric growth, and he's come back with a good chunk of money, and he's doing startups and other things, right? This person is diversifying into various areas, right? Equity, debt, and property and stuff. So one investment he is considering is he has a chunk of about 30 lakhs, right? So he, I think, somehow got solicited by Hiranandani. This is in Oragadam. I think all of us are aware of Oragadam because we've been bombarded with ads for about a decade now, starting with, I think, I forget the developer name. It was Maddy or Madhavan that they had as a...
It is Hilco. Just wanted to correct that. It is Hiranandani upscale is in Siriseri. Whatever they do in Oragadam is called, is in a different company named Hilco. That
Exactly.
is what. Through the Madhavan of Oragadam was with Arun
Excello, yes. So there is Arun Excello, I think there is DAC, there is Hiranandani, there are a lot of people in Oragadam. I mean, I have not gone there physically, but I mean, the ads have made the place popular for a long time now, right? So Hiranandani, typical to their model, like we discussed last time, have a huge land parcel. They have developed a small section of it as apartments. And then now the next section they are unlocking as villa plots. I think they have, I forget the name, but it's like phase 1, phase 2, phase 3. So they have X number of units across these phases. And their model, right? It's a 10-20 year roadmap, and they develop schools, amenities step by step. And typically they have followers, what we call the tier 1, tier 1.5, tier 2 developers, regional developers, and also kind of follow them. So these are plots at about 3,500 rupees per square feet base price. And then there are like 2 tiers of additional prices, which is their amenity fees, club fees and stuff. And also typical taxes, registrations, kind of landing at about 4,000 rupees per square feet. And these plots start at about 600 square feet. And then you have 600, 900, 1,200, which is about what we call half ground, and then 1 ground and even beyond, right? So typically they land at about 4,000 rupees per square feet. For comparison, there are other regional players who are doing the same thing at about 2,400 rupees base price, plus maybe give or take 10-20% for the additional fees and charges, which lands at about 2,800 to 3,000 rupees per square feet in the same area, right? So the Hiranandani project, which our user or viewer is kind of excited about, there is some video, some promotion. The apartments are already live and kicking, and they're kind of anchoring these plots around that. And it works to his ticket size because 24 lakhs is the starting one, like 600 square feet one, and then 900 kind of goes to 30 lakhs and beyond. So he wants to invest below 30 lakhs. because of the brand name, because of the new area, because of the publicity. Is it worth it? What are the kind of returns he should expect? Uh, or should he consider the competitors, as I told you, or are there other comparable things he should consider? So I wanted a pretty holistic view of this so that other users can benefit from it.
Yeah. See, first and foremost, what we need to understand is real estate in India, at least, has a certain set of pattern, right? A broader pattern in terms of irrespective of where you are buying a plot or an apartment or piece of real estate. What happens to it? There are a few thumb rules which you can always have. Is that when you would like to double something, right? Uh, Double in terms of your investment or whatever it is. When does it happen faster? Is when the price is at low, right? The lowest point. Say 100 rupees doubling to become 200 is definitely faster than 200 doubling to 400, right? So this is one thumb rule which all of us need to have. One. Two is that irrespective of where we buy a piece of real estate, be it an apartment, uh, plot or whatever, a typical 8 to 10 years, is a right horizon to basically look at a doubling scenario. An average, if you typically see, every 10 years, it tends to double. And today, there are few scenarios it is taking to a 15-year period. But those are, I would say, still it's an exception to the majority of period, right? So, can we beat the average of 10 years, right? That's where an investor would look at, right? Can I look to invest in a parcel and probably can I still double it by beating the average of a 10-year period? This is the first aspect any investor should look at. Having this as an objective, if you start considering, he need to judge purely from the, if because we are talking about Chennai and he's an investor who's from NRI. I don't think he's a bit loyal to certain locations, right? So it's more of probably he's considering Chennai as a point, but typically he's looking at a good piece of land which is giving him some sort of security during the tenure, and then he would likely to double it
Yep.
in a
Yep.
period of time.
He's, I would call him a returned NRI who's settled in Chennai. I think he's living in that corridor around these new areas of Escolatur and all of that, right? That area, which is like the new metro areas. But yes, he's not likely to stay in Oragadam for sure. And at least at 600 square feet, he's not going to build anything for sure as well. So yeah, it is pretty purely, I would say, it is purely speculative. But yeah, long-term investment and trust on Hiranandani.
There are two questions that I have for you again, Arun. Number one, you speak about planning well ahead and Hiranandani being a pioneer in planning it up. Siruseri was a massive success, but Oragadam has been quite speculative. In the event of a certain misfire, what are all the measures that the developers can get into deliberations in terms of doing the course correct is number one.
I'm just going to touch upon that in terms of location and very pertaining to that project. We will talk about it, Balaji. But before that, I would like to, give some sort of a sense as a real estate piece and real estate investment. And from there, if we actually consider Oragadam vis-a-vis other places, and that's where I was about to head, when I was starting last time. So the investor whom we are considering, talking about, is trying to invest in Chennai. He's not worried about whether it is an Oragadam or a Siriseri or probably Adayar or Ambattur, Annanagar, etc.
Another, yeah.
So these are not his considerations. His consideration is, hey, can I look to double my investment in real estate as a portfolio by beating an average of 10 years, right? That is the first point. So to beat, the first point to consider is, am I entering at that, is the lowest point, first and foremost. So to consider lowest point, he has to definitely do a comparison of the same parcel of land in comparing to Oragadam, a Siriseri, Ananagar, or beyond Ananagar, right? Wherever, or probably even Chengalpattu, wherever it is. And can he still afford a 600 square feet in those places and feel secure about it, and can get a price which is equal or lower than what he is considering to buy today? Right? This is the first point of contact, the first point of consideration. So by this consideration, he has to basically accumulate. Say, let's assume Oragadam is something which he has decided after considering the other localities as something which is definitely at a lower point. This is one.
Yes.
Two is that, second, this is one perspective, purely from the investor angle. Two is from the geography or the location angle itself, as to how over a period of time Chennai has developed, right? Where is it going to get developed, or where does it have land mass to expand further in next 10 years? Because our doubling period is going to be in the future, right? And we would like to get into the most probable locations where much more developments or space is there, so that the future developments or announcements would invariably come in those typical areas. So Chennai, if you see, it is on the almost in the eastern coast, right? The Chennai Central, or the port, we call it, is the point at which it starts. Typically, if you see above Chennai, I mean above that point towards the north, there is less of mass for Tamil Nadu, right?
Yes.
Below that point is where the mass or probability of expansion is, right? This is a typical, if you see any of us see the map,
Yeah.
Right? So if you see why we are calling Chennai Central or the port as center point, is because that's where Chennai started, right?
Exactly. That's Chennai zero, by the way.
Exactly. Chennai zero, by the way. So all of us, that's a history past, right? Let's not get in there. So from there, if you typically see how Chennai would develop, is basically, let's try to draw a concentric circle, keeping that as a center point. Just try to, I mean, imagine anybody could do this, right? So whichever city you are considering, or whichever point you're considering, try to plot the 0 point and try to draw concentric circles, right? So wherever the land mass is less, which is towards the north for Chennai, typically those concentric circles will not go towards the appreciation compared to a south or a southwest area of Chennai, right? That's why Chennai has eaten a lot of space in Kanjipuram and Chengalpattu today. Than probably something in, it has not gone on to exploit the
Indoor or beyond, yeah.
Absolutely, you're right. So this is one, and why there was a IT park announced towards the south, why there was a Mahindra World City, Ford was brought towards the Tambaram side. All these things are very much towards these things, right? So this is how a simple or macro plan anybody could be able to visualize. So considering this, where is Oragadam, right? Is it towards the south? Is it towards the southwest? Or is it towards the northwest or north? Is something which we need to see, right? So in that perspective, if you see, Oragadam is almost towards the northwest, right? Towards Karnataka, right?
Yeah.
Am I right?
Exactly. Yeah, towards Bangalore, by the way. Yeah.
Yeah, Balaji is more the Chennai expert. Yeah.
So actually speaking, Chennai is closer to Andhra Pradesh, geographically. And Karnataka, you'll have to come pretty deeper into the hinterlands, touch Krishnagiri. That's where the Karnataka borders sort of touch upon. So, geographically, that's different.
But yeah, it is towards the northwest. Is it northwest or west? Oragadam.
It's more towards the west.
It's a sharp west of Chennai. Yeah, basically. Okay. The northern part, it will touch Andhra Pradesh, it's Tiruvottriyur, Gumidi.
Yeah, I know the place. It's coastal and goes towards Andhra Pradesh.
Typically, where are we in terms of expansion is that, okay, south takes the least development. North takes the least development. North takes the least development. Northwest takes better than north. West takes better than northwest, and the southwest takes a better stand than west. South is much better than southwest. But
I'd
typically,
like to take a little drive over here. Given the experience of you two being in Mumbai, having your in-laws right over there, that we always take a jibe against the South Mumbai people. If you talk something, sly, or if you talk something quite pricey, I'll simply say such a South Mumbai attitude. And it turns out every city has got that. What Arun said is right. For some reason, the southern part sort of gets developed. And for some reason, the most developed places in the West, it's called the downtown. And predominantly, if you notice, it has always been in the southern part of the city, of any city for that matter.
We'll take that.
I'd like to also, plot this as a question to you as you move forward. Why South has been the sought after place in any city for that matter? Sorry for interrupting. Firstly, I'd like you to continue and then
coming back to yours is West. Yeah, in this case, it's West, Arun. Yeah, it is West.
Yeah. So it is basically the West, and Southwest is the super high point for Chennai always. Okay. Yeah. So considering, because the South development is purely ECR and coastal area, where you won't be able to actually, because we can't spoil the environment, right? So
you can't go further east. It's almost the sea. Yeah.
So always, just for be environmental conscious, always the government would move towards the southwest, southeast, southwest, and the west is almost is more preferred than the.
Yes.
I mean, yeah, I think I made the point, right? So southwest is the point. So considering this, if you see Oragadam, yes, it has a valid point, right? It's a vantage point. It's a place where all the developments are. And over a period of years, the south, this west to southwest is where the auto ancillary is,
yes,
right?
Correct.
And the southwest, typically the OMR one stretch.
Southwest to south is IT related. West to southwest is more auto and traditional industries.
So if you see that primary roads for Chennai also has been these three roads, right? The ECR, OMR, and the GST, right?
GST, and then beyond to the Punamalli road. The western corridor, I think, is more like Punamalli and the ring roads.
It's Punamalli,
yeah, absolutely.
That's called the Bangalore highway, basically.
Yeah.
So these are the considerations, right? So one, as I said, one from the investor perspective, he need to know simply as to amongst this west to southwest, is he getting in the lowest point? And second is, hey, this location is the lowest point. Amongst the location, can I look for the best in terms of security? Okay. So let's assume Oragadam falls into it. 3,500 or 3,000 is the talking point right now.
4,000 or 3,000, yeah, roughly, yeah. Landing.
Yeah. 4,000 or 3,000, all inclusive, right?
Yeah.
Amenities put together was 3,500 plus amenities for a Hiranandani.
Amenities and taxes together 4,000 for Hiranandani. The rest of the competition is 2,800, 3,000. Yeah.
2,000, yeah. So typically 1,000 rupees, right?
Yeah.
So what we have to start considering is, can I go on to double this additional 1,000 rupees for the amenities and livability index?
The brand.
Both of it provides the livability index, right? Because exit has to be considered for this.
Yes.
Right.
Yes.
We spoke about now entry. So now he has the person has to consider the exit. So whenever I like to resell it, right? How fast can I resell? That is first point. And second, while selling, without compromise, can I sell it? Will I be able to have an advantage? So the exit point has to be considered for the difference, I would say, this 1,000, 1,200 and things like that, right? And so once the exit, he's okay and he's confident for a Oragadam or any other, I mean, Hiranandani, Hirko, or Arunexalo or DAC or whoever it could be, right? Once he considers that, okay, hey, with this community, it's just not about the brand, because today, any of the brands are considered almost equal, right? Last episode we spoke, there is not much of a difference in terms of brands.
Yes.
Right? So
offering
match, and only the top 10 has some sort of a brand value. Maybe Hirko has that, right? Arun has that, and DAC has that. We are not going to consider that right here. So the point is that brand is one side. He has to probably visit those properties and see as to how it is and how it will be in 6-7 years in terms of over a period of time maintenance.
Yes.
Right. While selling, am I going to see the same property like this with probably he might be going today where it is under construction or or upcoming empty lands and things like that.
Yeah,
Where
it's
there
just
is not.
layouts divided properly. It's just cleanly divided layouts currently.
Can he visualize in 5 years, 6 years, people there, right?
Yes.
Livable people there. And if he could visualize the amenity in terms of swimming pool or whatever with people,
Yes.
right? Then I would say though that project has much more, exit oriented stuff, because everybody provides amenities today and everybody provides infrastructure. Yeah, coming to that this is amenities, right? Infrastructure is a very, very important point over a period of 6-7 years, right? How good is the drainage there? That is one of the very, very key, because when we are looking at a community, the bare minimum, the drainage and the water lines within the community, how well it is laid, how sustainable it is very, very key, because we do not know what would happen in 5, 6, 7, 8 years down the line.
Yes.
How many more development would come, what all government announcements would come, which will drive few more aspects there, and there could be water scarcity, or there could be drainage issues, there could be anything. So those are things which we need to really consider than seeing a swimming pool, right? Than seeing a gym, than seeing this thing. So we need to definitely see these aspects to consider whether 3,000 per square feet is good or a 4,000 rupees per square feet is good. And this 1,000 rupees, can I double it, right? Beating my age 10 years. So, yeah.
Typically.
So the second question over here is, let's split. We are in 2024 right now. We'll get back by 2 decades. Between 2004 and 14 is when we saw a massive spike in the real estate. We saw some humongous growth. While the next 10 years followed a lag, or there is a dip in the growth rate, substantial dip in the growth rate. Not that the demand is less, not that the market is sort of slow or sluggish or whatnot. The demand is more than what it was in 2004, in 2014, and even today for that matter. Now, coming back to the per square feet rate that we were talking about, somewhere between 3,000 to 4,000 in the same said area, Oregon.
Balaji, I want to just interrupt there. When you said there is a brilliant period of 2004 to 2014 and there is a slug, right?
Yes.
I am curious to know what do you mean by slug?
In terms of the per square feet rate,
there was
value,
flatter growth in prices.
to
Yeah, I agree to Balaji. There was even a little bit of reduction in prices. Probably there was a lot of growth with inflation around UPA 2, and there was definitely property appreciation across the board, and then a little cool down after UPA 2.
I would just say this, right? I mean, is there less amount of transactions which were happening? Probably yes.
That's the interesting part. We have enough transactions happening. There is a spike in the demand, and yet the cost has not gone up.
Right. Yeah. Prices, in fact, cooled off a little bit, flat to a little bit of dip, at least in Chennai, if I know right.
No, I'm saying, see, dip is something which I'm really questioning, Badri, because
Okay.
dip is the only point which I'm questioning here, right? It's probably we, the outsiders, just take to react further. Basically, a plateau or a standstill doesn't mean that it is dipping.
Okay.
Right? We tend to exaggerate and take the pattern towards the dip, even if there is a plateau or a right? So, I'd like to ask people who have invested who held properties in 2014, who went on to sell for less price in 2015 or 16. I will not find anybody.
Okay.
Right? It is maybe that it has not gone up in terms of appreciation.
Yes.
Probably the flat price.
7 to 12. I know people who have bought booked apartments in 2007 in OMR and got possession around 2012-13. I don't want to name the developers. Some developers are infamous for delays, and they hardly saw any appreciation in that 2007 to 14 period.
See,
Almost flat.
exactly. Just because that's where we are. See, unfortunately, Indians, we think that appreciation is norm, right?
Okay.
That is something not right? So whenever there is no appreciation, it's always dip. It's something that
Okay. I have a
default.
question over here to you, Arun.
Just
I
like
have
my
a question. I have a question over here to you. You know, when we talk about appreciation, there is always sort of prejudice that at least with the factor of inflation, that there should be a little, increase, right? Everything either stays put. Why is that real estate is quite immune to inflation? Especially the per square feet price in Varagadam is the exact example of.
last episode, no, it's basically the demand and supply, right? So when if you take the US 300 or 400 million population, which means we are talking about 150 million houses. That many houses are almost 70, 80 million houses are already there, right? So
Yeah.
which means it's already the demand is met. So when that's where in proportion to inflation there is a depreciation and appreciation in US. But vis-a-vis India, we have 1.4 billion population when we need 400 million houses. Out of 400 million today, probably we would not have gone past 20, 30 million houses,
Okay.
right? And on a yearly basis, how much we are adding? Probably maximum 2 million. I'm saying 2 million is a wild guess. I would say I don't think it would go. I mean, are we adding 2 million new stock every year? I doubt. Probably we are doing, in my understanding, we maximum would be able to do close to a 2 lakh houses, 2 to 3 lakh houses
Just
we can do,
yeah,
probably churn every year,
which is
right?
a tenth of the demand. Yeah.
Absolutely. I mean, where is 300 million and where is 20 million, which is or 20, 30 million, which is there today? And what are we churning is about a couple of lakhs or at best 4, 5 lakhs, maybe, right? Year on year. So those are things which is like wild, right? So when there is a huge demand, always, whether you earn, you don't earn, there is always somebody who holds money, right? In the ecosystem of market, few are going to have more money and few are going to have less money, or everybody going to have a good equal amount of money. These are the scenarios which will always emerge, right? So which means somebody or the other is going to buy those, consume those properties. So
Correct.
that's the only thing. Hope I answered, right?
Yeah,
So
precisely.
demand supply as of it's as good as gold, in India, as good as real estate in India. Today, I think I read somewhere where almost 70% investments are happening in gold and real estate in India, right? Anybody who thinks saving, they put it in gold or real estate. Out of 70%, right, almost 50+% is with real estate. About 40 to 18% is with gold.
Yeah.
The remaining 30% is where it is split amongst the obvious things, where like insurance, mutual funds, and
I think I have a very good answer for your dip problem also for both of you. Even to take our viewers example, right? The investor that I spoke of, that person probably has a cash kitty of about 2-3 crores, and he has diversified across things, right? He's spending on building one more floor to his ancestral home. That is an expense, right? So that he doesn't need to spend on housing, and then he's putting equity sips. In fact, he's doing the typical smart thing of putting a debt instrument, and whatever comes out of the debt at about 8-10%, that's output alone he's putting into an equity SIP, which is great, which is what is advised by everybody, right? And then he's probably doing in these modern age debt platforms like Wind Wealth and Sustwest. Sustwest is, I think, solar investments. Wind Wealth is like fixed investments in gold and other things. They all give about 10 to 12%, right? Typically, like the higher end of your FD. I would say FD plus plus, right? If FD is around 7 to 8% for.
In India will get, I mean, any debt instrument in India will get, you will get it at 10-12%.
Yeah, typically 7-8 is the bare minimum without senior citizen. If you push on a little bit of some of these modern platforms, you can go to about 11-12. But typically they have a shorter maturity curve. They don't, for their own safety, they don't promise like 3-4 year horizon. They typically do 1 year horizon. Usually as you expand the horizon like bonds and rural electrification, it becomes again 7%, 8% because they don't want to risk their side. So for such an investor, purely he is diversifying, right? 30 lakhs is the thing he has in plan for real estate. If he doesn't cater at about, obviously he'll be super happy if he caters at around 15% per year, whatever is the period, whether it's 3 year, 5 year, 7 year. He will at least expect 10-12% out of all the perception selling that real estate has done for him. Now, if he does less than 10% CAGR over 3, 5, 7 years, he's going to blame that this dipped subconsciously. He's going to say that this is dipped for me. Like 5-7% is not going to cut it because all of his other avenues are typically doing. So anything less than 10% or 8%, he's going to be like, I lost money. So that is a sign, right, for any investor.
Yeah. So point is that easy investing, how much percent of his portfolio is real estate and how much percentage of portfolio
I
is
think
gold?
out of this new kitty, it is probably 10% of his entire newly found wealth or something, which is kind of got out of retiring from a Western, I mean, semi-retiring at a young age from the West.
Yeah. That's the new age investor, right?
Yeah.
These are the
we call it FIRE, right? Financial independence, retire early. Like at around 30-35 people want a kitty. Of that kitty varies. For the West, it is a couple of $1 million. If you want to come to India, 3 crore, 5 crore might be enough. Then they want to deploy and then do something fun. It's not like they don't want to work, but they want to be financially independent and not kind of be bogged down by the monthly check. That is what is called FIRE, right? Financial independence and retirement, retire early.
Yeah. So now, what I was trying to say was that this is the dream, individual, or this is the IC, customer profile. What Zerodhas are looking at, right? Where the portfolio has almost 10, 20, 30% at best in terms of real estate, or if not real estate, they always vouch for a debt to handle about 40% or 50%, and then the remaining 60-70% goes towards the equity, right? And can we beat the inflation, right? So our inflation is X, and can we beat that inflation and get a return on a yearly basis, right? Can we do this on a every year 12-month cycle? Is what a world of today is. But I would say we also have to learn from our Indian context, where not every year is same, not the individual is same, right? There is always personal side to it. There are families to it. There are situations which arises, right? So I don't think our brains would work in similar ways every year, right? So as an individual, I would say that's where we need to probably mark the difference, and probably that's why Indians are relatively stronger when they put 50% in real estate. Another 50% is the philosophy with which you are talking about, right? So if I have 100 rupees, I put 50 rupees as something which I don't expect a return. It's more in terms of me sitting, planning for my retirement, right?
Yes.
So that the settlement or retire early or comfort retirement, all these words come from this 50%, and that 50%, if you see, that's where this gold and real estate comes in.
Yeah.
Right. Yeah. So the remaining 50% is where always looked at in terms of 12 months or 18 months cycle, right? Where you put in terms of mutual fund, stock market, crypto, whatever you think of, which could be churned around in 12-18 months, right?
Yes.
Nobody's going to play a long term here.
Yeah.
Right?
Even the high interest debt, I told you, right? The 11-12% fellows don't promise more than a year, typically.
Absolutely. So that's the balance. I think that's where, as I said, real estate is relatively a long-term view, but for the long term, it gives you a much assured, a better returns than an FD, and it could beat the inflations, right?
Yes.
Over a period of 5, 6, 7, 10 years, right? So that is something which we all can. think
I
of?
have a magic wand wish list. I know it's a regulatory nightmare and there are a lot of challenges in doing this. But obviously, the same ICP person that I told you, right? These people are approached by everybody. They are approached by the Hiran, and obviously they are searching. Then Google crawls them, and like people they do
Yeah.
calls, and like Hiran and Dani hits them. Everybody hits them, right? They are like a wet dream for any Indian financial person, right? So PMS is something which has kind of gone through its own curve, like equity PMS, right? People who take minimum 25 lakhs, 50 lakhs, 1 crore, manage your money. There has been a lot of wrong incentives there as well, because typically they used to make a lot of money on churn, just taking your money from one place to another and not optimize for returns. SEBI has cracked down heavily on them. Now they charge more by the return exit loads, which is a good thing, which is a healthy thing. I genuinely think, I think I leave on this note. We will take this up in a later podcast. It's a wish list item. I know there are rates and stuff. Rates have their own challenges. Rates have suboptimal returns. I also personally feel you don't need to challenge me for its own inherent challenges. But I genuinely think there is a huge case for a real estate PMS. Somebody who can take a pan regional or a pan India or at least pan South India, West India approach, and then say, you come and park a minimum X amount of money. This is a fund that I'm opening. And then like 25, 30 lakhs minimum commitments. I'll take this much is the fund I'm opening. And then kind of go and figure out, it could be anywhere. They could spot that, hey, in Amravati, there is prospect for more 3x, 5x. In Raipur, Chhattisgarh, there is more 10x prospect. In like Sanand, Gujarat, 10 factories are coming. So
But
this kind
there,
of view, we should give
there
an
are
institutional framework.
regulatory challenges there. There are regulatory challenges there. I would say it is yet to those sort of instruments. See, today only they have spoken about the SM rate, which is 50 crores and above, right?
Yes.
So 50 crores is something yet to even figured out. I'm saying 50 crores is a good money. I'm not denying it, but there is some sort of SM rate regulations has to be much more spelled out.
Yes.
And probably if that goes towards a residential and under construction projects as well, I'm sure most of the developers will go out of will choose REIT than the banking system for construction or short-term loans
Yes.
or project loans. Thereby, there will be a huge switch in terms of our inflation metrics itself. Right? So, I mean, it's going to be a totally different perspective. There is a huge macroeconomy impact on that. I mean, if whatever you're saying is definitely a gap, but for it to happen at scale, and if it happens at scale, there's going to be a big macroeconomy
Yeah,
impact in terms of.
the challenge is
Got
what
it.
happens in the US. Typically, even in the last 3-4 years, there has been a boom in the zero interest rate phenomenon. But people are figuring out that 30-40% of homes have been bought by BlackRock and people, like it's not even real people who are buying real estate. So it drives up inflation, it drives up prices. It obviously starts again helping the 1%, 2% who are super rich. And kind of that challenges are there also.
See, financial inclusion, at least in real estate, financial inclusion should also be parallelly coupled in rolling out demigration as well, right? Instead of aggregating everybody,
Focus to one place.
exactly. We need to probably within Chennai we have to demigrate. From Chennai, I mean within Tamil Nadu, from Chennai we have to demigrate, right? From tier 2 we have to demigrate to tier 3. As this happens, whatever you say also happen, right? Then what happens? These two will really drive the proper economy.
Yes.
Otherwise, what happens is still the demand supply gap is going to be much bigger, better. These become margin for the investors. I mean, as I
Yes.
said, it's a macroeconomic problem, which is not our game; it's
Yeah.
government's game.
No, we can discuss that in later. I think it happened with Greater Noida where they just kind of drove up crazy prices even before there was any highway or usability. Then eventually the highways were built and it made some sense. But for a good 5-10 years, like it is like all people equate crypto to Greater Noida because it's just speculating on like middle of nowhere plots and
Exactly.
then prices going up. Anyways, I think we kind of coming to a logical end here.
Another
So
episode, definitely.
thanks for your considerations on all of the things that he should be seeing. I think it gives a good data set to work off. We also have a lot of wish list topics like rate and real estate PMS, is it a possible? Is it has more cons than pros and all of that? So yeah, a lot of topics. We will keep taking questions like this from users because these are more interactive and this gives thinking point to similar people in the same profile. So yeah, thanks Balaji and thanks Arun. So yeah, this I think is a logical kind of way to pique the interest and pass there. Yeah.
Yeah, we are reserving quite a lot of episodes from here as well, and a lot more questions coming to you, especially Arun being the industry expert, that you may have to talk a lot. You have to increase the number of liters that you have in hand.
Super. Okay. Thanks, Balaji. Thanks, Arun. Yeah,
Thank
it's
you.
yeah.
Bye. See you.
Cheers.
Cheers.